guys, Lewis Aaron here, Frugal Student. You noticed that this would be a new setting. It's because I've recently moved. But anyway, let's get on to the video. And I'm fed up with seeing other people's videos on YouTube, and this is the main reason behind this video today. I'm so fed up of listening to absolute crap that I hear other people say on YouTube. And I hate being a negative person, but bloody hell, it's really starting to get to me. So this is why, if you listen to this video all the way through, this will probably be one of the most important investing videos that you'll ever watch. So I got a lot to live up to, but just listen. I've been investing for around 5 to 6 years now. And I always fell in with these different kind of communities of investors. I went from value investing to dividend growth investing, and all of these styles all emphasized either technical analysis, looking for bottoms, or fundamental analysis, looking at price to earnings ratio, price to books ratio, dividend yield, payout ratio, EPS growth, free cash flow, you name it. And people think that they have to understand this to be a good investor. And I myself used to say that you need to look at the fundamentals as the primary part of an investment in order to be a good investor. It's not true. And that's why I'm putting this video out there. Because investing is much simpler than people put out. It doesn't matter how many deliveries Tesla are making. These are the videos that are getting views on Facebook. Tesla this, NIO that. It doesn't matter. You don't need to listen to this absolute tripe to become a good investor. There's just one thing you need to do to become a good investor, and that's to listen to your head, to look around you and to see the opportunities around you. Now, all of us watching this video work, or we're a student, okay? And we see other people around us using products. We see the companies we work for using products and using services. This should be our starting point, is to shut up about the fundamental analysis, the technical analysis, looking at stock tips and all this crap. Is to look at the world around us and look at the products that people are using. Now, one of my most successful investments is Microsoft, which is up 200% since I bought it. Now, I'll be honest, what fundamental and technical analysis did I do? Barely anything. Barely anything. Of course, I looked to see if it was an okay or reasonable valuation. I wasn't looking for value or dividend growth or any of that. The reason I bought Microsoft is because it's bloody obvious that it was going to be successful. You look at Office 365, everybody's using it, everybody's subscribed to it. People are paying 3, 4, 5 quid a month, companies that is, in order to subscribe to their services. And it's an integral part of the business. So this is the secret, is to look for companies that are essential. Now, there's a posh way that a lot of investors like to think, that like to talk about these companies. They like to talk about things called economic moats. And you think you have to read, I've got the book here somewhere, Michael Porter, Competitive Advantage, Morningstar, Pete Dorsey's little book that builds wealth. Actually, you don't need to read any of these books to get the fundamental grasp of what a good investment is. Think of a product that you use that you cannot go a day without using, or you cannot cancel, or they turn that price tag up and there's nothing you can do about it and you keep paying. Those are the type of companies you want to be investing in. I can't go a day without looking at Facebook on my mobile phone. And I'm a grown man. And I look at Messenger every day, I look at Facebook every day. I'm not on Instagram or whatever. I look at these things every day. Now, how does Facebook make money? They make money through eyeballs, through people using their services. So when Facebook was at $127, $128, $140, $145, I was loading up on Facebook shares. Call me stupid, but I looked to see the free cash flow, don't get me wrong. I looked to see the margins, but the main part of it was, I was teaching at the time, everybody in my class was using Facebook, was using Instagram. That's all they bloody talked about. So it doesn't take a rocket scientist to see that that's going to be a good investment. It's going to be a good starting point for an investment. Now, I know what a lot of you watching this video are going to say. You're going to say, yeah, but there are other products and services out there that aren't profitable that loads of people use. So yes, that is the room for the fundamental analysis right there. That is where you look at the margins, you look at the cash generation, cash conversion. But it doesn't have to be a starting point. It doesn't even have to be the primary part of it. You just need to use your brain and think about these things. Another example I can give you, AutoTrader. And now I'm an idiot because I was sitting on my hands when AutoTrader was trading at a reasonable valuation. Most people, or many people, who buy or sell a used car in the UK use AutoTrader. It's a website, and they're taking a cut of everybody's money for advertising, everybody's money for purchasing cars, going to view cars, premium posting. It's a website. So why is this successful? Because of the network effect, because there's the good capacity of buyers, a good capacity of sellers, and they interact on that platform. It is hard, it is absolutely hard to try and replicate that. eBay have tried and eBay have failed. Even Facebook's trying to get in on the act and it's not quite working out for them. So again, anybody who's in the car industry, or if you know anybody in the car industry, they would tell you that everybody uses AutoTrader. So AutoTrader is going to be a good investment. The fundamental analysis comes second to that. So trying to wrap this video up and trying to wrap my rant up, if you like, just think about it. Think of all of the companies you're using every day, how sticky they are, how other people are using them. Now try to think, are those companies going to be around in 5 to 10 years? Are they going to be successful in 5 to 10 years? If so, it's probably a good investment. Of course, still do your fundamental analysis, but it comes second. Stop looking quarter to quarter. Stop watching these guys on YouTube and on Facebook, looking at quarterly Tesla deliveries and all this crap. Use this and use your eyes and use the world around you. Think of the long term. Don't get caught up in this. Don't get caught up on this. Moving forward, I'm going to be completely changing my channel. I'm going to be talking about economic moat investing. I'm going to be talking about simple layman's terms. It's not hard to understand moat investing. Everybody can do it. You don't have to have a degree in investing. You don't have to have read 10 books. You don't even have to have read The Intelligent Investor. I've read that book 2-3 times. And the most important lesson to me came from actually Peter Lynch. It came from One Up on Wall Street. It came from using my brain and just thinking about investment ideas. And those have been my most successful investment ideas. So thank you very much for watching. If you're interested in economic moat investing, then subscribe to the channel. I'm going to try to make videos every week. I'm going to try and keep on top of things, try to build a following here, not for my own ego, not for anything else, of the fact that I'm just fed up of what's out there. I'm fed up of the current content that's out there that's making people focus on these short-term quarterly things and to think you have to be some kind of graph or fundamental wizard to be a successful investor. If you like this video, subscribe. Drop a comment, tell me I'm wrong, tell me I'm right. But thank you very much for watching.